What's going on, guys? Hamilton here with the Trading Initiative, and I recently uploaded a thread to Twitter outlining the 5 rules that I stuck to while successfully 10xing a small options account last year. I'm going to go ahead and make a video going over those exact 5 rules while also diving into the data in TraderView.
Could have been on Wall Street, should have been on a ball team. Could give a fuck about y'all team, cause I don't really feel none of y'all. Morphine, Wall Street.
All right, guys, so first things first, yes, I did 10x the small account. We turned $200 into a little over $2,000. It took us 71 trades, and it took about 3 months. There were no YOLOs. There were no lottos. It was simply a product of utilizing the TTI Swingtrading System, the system that we trade with inside the Trading Initiative. 5 rules that really stuck out. I want to go through them one by one, and then we'll look at some of the stuff in TraderView itself. Lower left-hand corner, we do have Tastyworks open because I really just want you guys to understand that this is really what we did. I'm going to go through not any particular trade, by itself, but you can go ahead and look through the trade history. All of the trades are here. There's no demo accounts in Tastyworks. These are real verified trades, and there they all are. There'll be a link in the description of this video if you actually want to download this in the CSV and go through them yourselves to verify the end results. I don't care. I'm here just to show you guys some transparent, profitable trading. So the first rule that I want to go over is that I stuck to a 3-to-1 risk to reward ratio or better only, okay? One of the most important things for us inside of TTI is this risk to reward ratio, because by skewing reward in our favor and minimizing the amount of risk per trade, we are able to lose more often and still remain profitable, particularly during challenging market environments, okay? So a higher R to R allowed me to lose more often without running the risk of blowing my account quickly, which is probably the hardest thing when you're starting a small account, specifically with options. You do not want to blow the account within the first few trades. So I eventually found my sweet spot around a 4-to-1 risk to reward, which is something I still utilize over a year later within this options account. And my final stats ended up being $130.85 per winning trade, $57.66 per losing trade, and a final R to R of 2.26. Now let's actually go ahead and look at this inside TraderView. If you don't know what TraderView is the program that we use within TTI where we automatically import all of our trades, and it spits out some awesome statistics like this. It shows us where our strong points are in our system, where our weak points are in our system, and individually based off our performance, we can figure out things that we need to either double down on if they're working really well, or things to fix if they're not. So this first rule here of focusing on 3-to-1 or better, sweet spot being 4-to-1. But as I said in the tweet, we ended up with a 2.26 R to R. By averaging $130.85 per win and trying to minimize the average losing trade at 57.66, it allowed me to lose more often than win. And that is absolutely the most important thing in my mind when it comes to trading, obviously, is to keep your winners larger than your losers. One thing I want to point out here is that even though I was targeting a 3-to-1 or a 4-to-1 or better, but aiming for that 3 to 4-to-1, I ended up at a 2.26. So I underperformed against my benchmark while still remaining profitable. So if there's anything you can learn from there, always assume you're going to underperform just in case bad things happen. Last year was not particularly easy to trade. We saw a lot of these small cap growth and growth in general, other than the large caps. Small and mid cap growth really suffered, and that actually bled into some of the large cap growth, maybe not capitulating, but definitely not having as easy of a go as it was in 2020. And that bled into my risk to reward ratio, right? It lowered my overall win to loss ratio, which we'll go over in a second. So by targeting that 3-to-1 or 4-to-1 risk to reward, it allowed me to lose more often and still be okay. So I ended up at 2.26 R to R, which, as you'll see in a second, allowed me to remain profitable, okay? So rule number 2, a 30% win rate or better, which is where this R to R comes into play, right? A higher R to R allowed me to lose more often. During times of drawdowns, I would just stop trading, and that's super important. That's kind of something that I've noticed when it comes to traders with more experience. If you're experiencing a drawdown, you're starting to feel tilt, etc., just stop trading. Take your hand off the mouse and keyboard, walk away, go do something, maybe stop for the day, collect yourself. By trading emotionally, you're just going to continue to make bad decisions, and you're going to end up in a worse spot than you were if you would have just left, all right? So no revenge trading ever. It also helped, by the way, that I did all of this publicly within the Discord. So there was, a lot of people watching every single thing I did, and that kind of made me and forced me not to be able to make stupid decisions. So if you're struggling with that, maybe trade in public. Open yourself up to some criticism. Maybe you won't make those dumb decisions. So at the 2.26 R to R, my break-even winning percentage was 30.67%. My final stats were 46.5% winning trades and a 53.5% losing. So I was statistically a losing trader. I lost more often than I won. But because of my 2.26 R to R, my break even was 30.67. And that's important because right now I'm winning 46.5% of my trades. 46.5% of my trades I ended up winning. My break even was just a hair over 30. This is why we target the R to Rs. This is why I can tell almost automatically if somebody actually knows what they're doing or not. In terms of swing trading, I can tell if somebody's just bullshitting and they're marketing a service and they don't actually know what they're doing. When they have stop losses, it's something like, they'll throw an arbitrary number out of stop loss at 20% and we're taking profit at 20. Congrats, man. You better be hitting a very high number of those trades if you're targeting a 1-to-1 or a 1.5-to-1. Because here I am at 2.26 and you need to be winning at least 30.67. Imagine if I was able to actually hit that 3-to-1 R to R by the end of this challenge, my break-even winning percentage would have been even lower. And if I would have been able to maintain this winning percentage here, the performance would have just been off the chart. So like I said, last year was a little bit more challenging to trade in, and therefore my performance suffered, but I still got the job done. And it all comes down to this R to R and this ability to be able to lose more often than win. So if you're struggling with this, try to take better setups based off of your take profits and your initial stop losses. Okay. Rule number 3, take lots of trades. It took me 71 trades with 0 YOLOs. There were 0 lottos, 71 trades. It was hard to find contracts that fit my budget starting at $200. And it's going to be hard for you as well if that's what you're starting with. Sub $1,000 is not a fun place to start trading options because you don't have a lot of availability. Deal with it. Avoid the temptation to oversize. It's hard. Now, I do want to admit 71 is not a huge sample size, but it does prove that our trading process works. You can see right here, total number of trades, 71. See some of the other statistics, going on here, a bunch of different performance-based stuff or whatever. But 71 trades is a decent enough sample size for anybody to be able to look at the data and be like, do you know what you're doing or do you not? Do you have a history of winning or do you not? We're not scalping. We're not day trading. So 71 trades over 3 months, I'm averaging less than one trade. Less than one trade a day. Realistically, I know that there's not 30 trading days per month. So I'd probably say definitely less than 2. Obviously, I don't have the exact number on here right now, but less than 2 trades per day. And I'm a swing trader. So obviously, we're opening up trades with the expectation that we're going to hold it for a few days, potentially up to a few weeks. 2021 didn't really give us the opportunity to hold those trades very long, as you'll see in a second. So realistically, 3 to 5 days was what our window of holding was. And so I wasn't averaging very many trades over those 3 months. And that ended up giving me 71 opportunities to be able to make this cash with a high risk to reward. All right. So once again, avoid the temptation to oversize. If you have to go dive to find $50 or $100 plays, depending on your account size, go do it. If your buddy's YOLOing Tesla and you can't afford it, don't do it. Last year before the split, Amazon was thousands of dollars per play. Even call debit spreads or put debit spreads, depending on which direction you wanted to go, were expensive. I could not play any of those. You just can't do it. You have to understand that your account balance and your account capital is going to be the limiting factor. Do not oversize. It's incredibly hard. And it's going to take you a long time to build an account. If you're doing this for infinite and not fast, if you're doing this the right way, if you actually want to learn the skill set, learn the skill set. Don't worry about the Lambo. It will come with time. So going on about that average hold time, my average hold time was 5 days. Now, there are too many swing traders that close out the same day or potentially the next day. Now, by definition, swing trade is legitimately holding at least one night. So if you are a swing trader and you have an edge in buying something at the close and selling at the open, don't let me discourage you to do that as long as there's alpha there. But majority of swing traders are not that way. Majority of self-proclaimed swing traders would do better just by holding those trades for a few days up to a few weeks. So if you're continually getting shaken out the next day, there's something wrong in your process, okay? The primary function as a swing trader is to allow the overnight moves of the market to impact your position, hopefully positively in the direction that you're looking at, right? Time is your friend as a swing trader. Avoid closing early. It costs you. Once again, we'll look at this. The average hold time for my winning trades was 5 days. The average hold time for my losing trades was 5 days. Now, typically what you will see if you have a larger sample size expanding an entire year is that hopefully the winning trades are legitimately longer, the average holding time, than the losing trades. You tend to cut losing trades quicker, and you tend to let your winning trades run longer as a swing trader. And that's something that's super, super, super important. I can't stress enough that if you're finding yourself holding your losing trades way too long, you need to figure out what's going on with your stop loss. And if you're closing your winning trades way too early, you need to figure out if it's a construct of your price target or if it's a construct of you being emotional over the amount of money that you've made on the play. Remember that the percentage is worth more than the dollar amount. When you're beginning, you want to build that account up. Focus on the process, not the profits. The profits will come later, right? So if this is a problem, it's something that you can dive into. Last year, at the beginning of the year, was not easy, again, to trade through. And so my winning trades ended up being the exact same time as the losing trades. Okay, let's go ahead and pull this up so you can see it really quick. All of the data is the same. I'm just pulling it off, right? So largest gain versus largest loss, and these are the lessons. So my largest gain was an overnight SPY position, and I made up $588. My largest loss was on a 6-week play in Caterpillar for a loss of $434. My learning opportunities for both. SPY was a great catch using the TTI Swingtrading System. We were able to identify a potential reversal based off of something that we call a BRB, and it ended up playing out, and it ended up being my biggest win on the account. You know, if you're trading SPY, sometimes the risk to reward is absolutely insane, and so sometimes it's worth going with that route. And then Caterpillar was a horizontal channel until expiration. Really quick, I want you guys to see that, yes, the stats line up, the 588 and the 434. But I'm going to go ahead and click on both of these so you can actually see the actual trades based off of TraderView's data. So this is the SPY play. I bought it on the 5th near, looks like lunchtime, sold it on the 8th. Looks like about an hour after the market opened. I bought it for $1.42, which is $142. I sold it for $7.30, which is $730. You can see on the daily here, I bought this dip, this BRB setup, sold it the very next day. Now in hindsight, I sold it way too early, but what are you going to do about it? I probably could have sold it later on in the day, but that's fine. Then you can see on the 5-minute chart broken down that I was buying the potential bounce off of these lows that we had already come down and established, and then sold it up into strength. And that was my biggest win, right? So the SPY overnighter based off of our system, one of the setups that we run, ended up being a banger. Now, the other one that ended up being my biggest loss partly was because I didn't totally understand at the time the concept of how theta was impacting contracts. I started options trading about a year and 8 months ago now. So I'm almost a 2-year vet in options trading. I still prefer shares. So I ran this small account challenge because so many options traders were coming into the trading initiative. I wanted to be able to empathize and help them because I'm a majority an equities trader, right? So now that I have about 2 years of options trading under my belt, we're performing very high here. But this play in Caterpillar, you can see on the daily, we were looking to buy, we were legging up, right? We were hitting a series of higher highs, and I potentially thought we were going to break out above a previous resistance area. And instead of breaking out, we obviously dipped back down, right? And my stop was somewhere around 215-ish, and we never quite got down there and closed. So my stop loss was never hit, but then the dreaded horizontal consolidation, which in my experience is like the number one reason people lose in options, specifically with swing traders, is that it's not the options itself deteriorates and expires worthless, not because you chose the wrong direction, but because it just doesn't do anything. And as you can see on this 5-minute chart, it expired worthless, right? You can see the 1 penny price here. There's nothing I could do with it. A few days prior to Caterpillar actually expiring, I couldn't even close it. There was no volume. So this was a learning experience for me going through this and understanding how theta impacts the pricing of contracts. And And everyone inside the group was able to learn that as well, right? So I essentially gave the market $434 to learn that lesson, and it's something that the guys inside the group hopefully learned without having to spend that amount of money. So I want you to take notice of the cumulative P&L curve, okay? So an upward sloping line is always good no matter how long it takes. A parabolic line is unsustainable, and if you want to grow a small account, you have to set realistic expectations. Stop yellowing, no Lambo, etc. Okay, so I want you guys to look at this really quick. You can see the win-loss ratio. I lost more often than I won. Trade expectations, win-loss, and P&L comparisons. But the most important chart in this entire thing is my cumulative P&L. If you see something, somebody posts a P&L and it's just straight vertical, I'm sorry. I've been in this game long enough to understand that that's an unsustainable growth curve. It's just not something that you would go and continually be able to do. You cannot sustain something like that. I'm never going to say anything bad about anybody that does have something like that. Congratulations, you won the lottery. You know, you full ported an earnings play and it went in your favor. Seriously, congrats. Luck's always great to have on your side. But for a sustainable trading system, you cannot expect that to hold over time. You cannot. So just like the market, when you see a strong uptrend of something going up and to the right, your cumulative P&L should reflect that same sort of growth expectation. A somewhat standard slope makes sense, okay? So you can see up and to the right, which is kind of a trademark slogan for TTI, up and to the right. As long as you're moving up and to the right, you're headed in the right direction. You can see my big wins, potentially the SPY trade. You can see the small losses I take, and then over time, up and to the right. And that's what you should be striving for, okay? So I hope you guys learned something. Last thing I'm going to leave you with here is that small account challenges are incredibly hard. There's simply not enough capital to avoid risk of ruin after 1 to 2 bad trades. So please, once again, do not overposition yourself if you don't have a lot of money in your account. Go find the cheap trades that still offer quality setups. You're not going to become a millionaire overnight. That's not the goal. You're trying to learn how to trade. You don't need to go and retire your parents tomorrow. Trust me. If it weren't for the first few trades, I probably would have blown the account up. There is a certain level of luck that comes with building these small accounts because you have a very small window of opportunity at the beginning. You cannot afford to lose a few trades in a row. You have to be on your A game, and that's what most people aren't going to tell you. TTI system was the key. The entire process was traded using the TTI system. So if you have been able to do this, you've been able to get out, you've been able to consistently grow a small account, potentially more than once, congrats, you are one of the very few. Hope you guys learned something. If you have any questions, feel free to comment below, and in the description, I will leave a link to the CSV. You can download it, go through all of the trades yourself, double check, make sure I'm not lying, maybe you'll learn something, etc. Catch you in the next video.